with you every Thursday, but I'm excited to be here. Remember, you can always follow us at Hearts and Hills, the number one. That is on Facebook, Instagram, all those other social medias that we older people just don't look at all the time. So make sure you follow us. Now, Yolanda has been out of the studio, but we got Miss Queen Size Thoughts herself in the studio, Monica with us again. If you remember, she hung in last week and she dropped some wisdom and knowledge on emotional intelligence. I think I learned a lot about myself. Hey, Monica.
Hey, I'm happy to be back. Thanks for having me back this week.
Yes, this is my ace Coon Boom. She's been riding with me for a long time. As a matter of fact, she started off with Hearts and Hills in the background. You guys would know that. But if you have any type of podcast out, make sure you check her out, Queen Size Thoughts. She drops a lot of knowledge, and sometimes I'm like, look, girl, I didn't even know that. So she's good to go. So one of her ideas was talking about finance. Finance after you finish college, when you're young, you're trying to establish credit, you're trying to get your life together. And she wanted to talk about that for the youth perspective. So instead of me trying to give you all of my life learned lessons, we got some professionals that's going to come and share tonight. So we're going to ask them to introduce themselves. We're going to start off with Mr. Delbert. I heard he's the king of Montgomery as he gives the mic to everybody else.
All right. Hello, everyone. I'm Delbert Madison. I work for Service First Bank. I'm Senior Vice President of Cash Management, and I've been in banking now for a few years.
A few years?
Just a couple.
Hi, everyone. I'm Deanna Madison. I'm Delbert's wife. I also work in banking. I am a consumer loan underwriter for ASC Credit Union, and I've been in banking about 11 years now.
So you guys got both of the sides covered. Yes.
But I know nothing about his side of it.
Welcome.
Hey, good evening, everybody. My name is Chastity Vickers, and I also work with ASC Credit Union, but I function in a different capacity. I'm currently the Talent Development Manager, and then also I'm the champion of our Financial Wellness Initiative. So I have few years. I'm not going to say exactly how many in the industry, but I'm a little bit knowledgeable about anything and everything as it relates to finances. So I'm glad to be here to help you tonight.
Now, I love that you say that you are the champion of financial wellness. So if you had to give one big advice to everybody out there about financial wellness starting off, what would it be? The main thing?
The biggest thing that I would say is, specifically if you're graduating from college, pay back your student loans. Pay those back, and then when you get to the point of accumulating bills, make sure you pay your bills on time. That's the number one piece of advice I give any and everybody.
Pay your bills on time.
Pay your student loans.
Pay your student loans.
Don't put them in for bearing.
Wait a minute.
They need 12 months. Don't use your 12 months.
No, go ahead and pay those off as soon as possible.
Let me tell you, one of my biggest issues when I first finished school is paying bills. Now, I loved money. And when I see that money in my account, I wanted it to stay there. I didn't want it to give it to anybody. And I remember when I got married, my husband said, "Oh my God, so you wait to the very last moment to pay your bills?" Yes, I like to see the money in my checking account, and I don't like to give it away. But that's really important. It is such, and that's one of the things I try to tell a lot of people. Make sure that you are being, what's the word I want to use? That you are self-control, that you have a lot of self-control when it comes to money.
Absolutely.
Discipline. Thank you. Go ahead, Mr. Delbert.
No, that's fine. You're good. Keep rolling.
No. Just tell us why discipline is important.
I'm going to yield to.
Okay, go ahead.
Well, like Chastity said, payment history is very important. That's one of the biggest factors that makes up your credit score. Actually, it's 30% of your credit score that makes up 30% of your
payment history.
Yes, so it's very important to pay on time. And for someone in the role that I'm in, when a loan comes through us, we look, payment history is the first thing that we take a look at, not your credit score, but how well you paid others. So it's very important.
Didn't know that.
Me either. 30%?
30%.
Yeah.
Wow.
I thought they was looking for that score. I was out there trying to get that score up. Get the score high. You know?
I want to be in the 800s.
But I also need to look at how am I paying my bills on time. Okay.
You do want to have a good score, though.
That's
part of the process.
It's like, don't forget the score.
Absolutely. But kind of to piggyback on, what Delbert and Deanna was saying, discipline absolutely is super important. Just like you were saying, oftentimes you like to see that balance in that account grow. But that discipline really is what's going to help you as you go further along with your finances. Being able again to make that commitment to saving once you take care of your bills, that helps as well. And also to Deanna's point, she also mentioned obviously that paying your bills on time, that's 30% of your credit score. But your score is also equally important. But the reason why they look at that payment history, because it paints the picture about how well you pay obviously your debts back. Just look at it from this perspective. If you loan me money one time and I don't give it to you, then what happens? You're probably not gonna lend me money anymore, right? So
yeah, deuces.
absolutely, that's it. So
Friendship has changed.
exactly. So when you take a look at someone's payment history, it really gives you the detailed record about how well they're paying their finances back.
Wow. I never knew that. So I always thought it was just credit score. What's a great credit score? I'm not sure what's the average credit score.
You want to take that one?
Well, a great credit score, I would want to say 740 or higher, but we can consider A plus credit. But you just want a healthy credit score, anything in the 700s or higher.
700
It's healthy.
Yes. Have you made it to 700 yet?
That's the intended goal.
We all start somewhere, right?
Start somewhere.
Yeah. So one of the tips that I want to get, and I just went through this with my son. My son, for those of you who don't know, I have a 22-year-old, and we've done a great job at the not getting credit cards, which we have to talk about. We was like, don't get those credit cards because they will mess up your life. I remember being on campus at UA, and I would get all these credit card offers, and you walk by and discover their MasterCard, you get all of them.
You tell me your age. They don't do that on campuses.
Ball out.
That's okay.
I never guess.
Okay, never mind. I have you should have said that before. God. But
back in the day, they used to do
They
that.
did.
Now it's illegal.
it's illegal to do it. Okay, that's why they're not on campus. I wondered when I started looking.
It's illegal because you went out there and got all of them and checked your credit up, and then
I sure did.
you know all your classmates.
My mama got one in the mail. She said, "Baby, what you got?" I said, "Mama." She said, "No, baby, come cut them up." So anyway, we did a great job at keeping them from credit cards. But what we didn't do was a good job at helping them to establish credit. Because even though you don't want them to get credit cards and you don't want them to get in debt, they have to have some credit. So one of the issues he had was trying to buy a car. Now, we know most graduates, when they finish college, one of the first things they want to do is buy a car. Now, I don't know if it's the best idea, but come on, Shay. I saw you open up. Come on.
Oh, I was just saying, absolutely. Like you said, they have to start somewhere. And you don't want to paint the picture that credit cards are bad. The goal is to just show them and teach them discipline. You don't want to put anything on your credit card that you know you can't afford to pay back. That's the goal. Because you want to make sure you're paying it off every month.
So spend what you can pay.
Basically.
If you can buy the $200 whatever, buy it and pay it off that same month.
Yeah.
And the rule of thumb is 30% utilization. You don't ever want to use more than 30% of what your allowed balance is. Just make it a practice of only putting on your card what you know you can afford to pay off every month.
30% utilization.
Okay.
So if you have $100, you can only charge $30.
Basically.
$260. I'm trying to help y'all with this math. $1,000, only $300 utilization for that month.
Right.
Okay.
Okay.
You were about to say something, Mr.
Yes,
Delbert?
yes, ma'am. I'm just going to give you, I guess, a different perspective
Okay.
that I like to do because I've been blessed where I can go out and do seminars in the community. I've been doing it for a long time now. And I know we're talking about when you leave college, but I'm a proponent. We have to teach them earlier. The earlier, the better. So, of course, I just brought one little display that we can show our people online. But you're going to fall into one of these three categories. Okay. Your income is going to be less than your expenses. That means that your LAM, some people say lame. I'll explain it in a second. Your income is equal to your expenses. That means LWM. your income is greater than your expenses is LBM.
Okay.
And remember, when it comes to the financial world, in my opinion, it's just a big game. You have to know how to play the game. One of the things I learned on this campus was we didn't make the rules, but we have to know how to play the game. Okay? So when you look at this picture, everybody falls into one of these three categories, and you can fluctuate between the three. All right? So if you're in the first one, that means you're living above your money or above your means. If your income is less than your expenses. Okay? If you're in the middle, your income is equal to your expenses. You're living within your means, but you don't have anything left.
Living paycheck to paycheck.
Paycheck to paycheck. So here's the intended goal. You want to be where your income is greater than your expenses, meaning you're living below your means or you're living below your money. And the thing about it is, it's a mindset that you're working on. That's the whole process. So that's why I said we have to start earlier. We have to teach earlier. We have to teach our young people earlier. It's not too late when you get out of college, but you have to recondition your mind. And when you do that, that's when you can move towards, you're talking about building wealth, putting yourself in a great position financially. So once you understand that it's a big game that you're playing, but you have to know how to master that game. No matter what your profession is, you still have to know how to master it when it comes to money.
Yeah, and it goes back to the discipline, like we keep preaching about.
Absolutely. And also to Delbert's point, you know, it's never too early to start. All of us have a lot of shared experiences in the world of finances. I personally have two daughters. I have one that's 13 and I have one that's 7. We started when they were 5 and 6 years old, explaining to them, here's what money is, here's what you use money for. You know, with my 13-year-old, she balances a checkbook. I know oftentimes as parents, we have a tendency to feel as if certain things we shouldn't let our kids know. You know, we should keep them in the dark. They should never know how much money we make, or, you know, we should provide very well for them and they should never see what takes place on the backside of it, right? But we really are doing a disadvantage to our kids when we do that. They need to know those things, you know, so that they don't make those same mistakes that we've made. I mean, I've been in this now for 17 years plus. I just told y'all my age. But I'm gonna say, I just, as Delbert said, I've been in each one of those categories multiple times within my years of being on this earth. So again, it's better to always start sooner versus later.
Wow, I love it. Lame. So you don't want to be lame, guys. Living above your means. You want to be LBM, right?
That's
So
right.
tell us, what does that look like? I want you to tell me, when you say you're living below your means, like how much should you live below your means?
How much should you live below your means? I don't know if I have a percentage to offer, but the thing is, you have to start where you are. And so the concept is, if you're living below your money, let's say your bills are $99 and you get paid $100, you're +1 for the month. And so you're conditioning your mind. So guess what? Next month, you +1 again. So you build in that savings, or you build in your account up. But my main thing is to work on your mindset. And that's how you move forward with handling money.
I go by the philosophy, if you can't afford to pay for it twice, then you really don't need to have it.
Absolutely.
You can't afford to pay for it twice, you don't need to have it.
So if I'm buying a purse, if I can't afford to buy 2 of those purses at that moment,
You gotta let
then
it
I
stay.
need to let that
You gotta
person
let it
stay
stay
right
where it
there.
is.
Absolutely.
You gotta
Okay.
let it stay.
But listen to what she's saying. The whole concept is you're working on your mental capacity. That's the whole thing. That's what you have to master.
So in your perspective, this is all just about your mind and the way you condition how you're going to live your life.
Absolutely.
Yes, ma'am. Well, you know, we used to say big mama, but growing up, you know, when you go to eat dinner, sometimes you get too much. They'll say your eyes are bigger than your stomach. Financially, it can be the same way. Your eyes can be bigger than your pockets. And so you just don't want to fall into that boat, because when you do, once you get behind, it's harder to catch up. Can you catch up? Yes, you can, but you're going to have to change what you're doing. Did I scare y'all?
Well,
I'm done.
I'm just thinking, you know how you're in the poet doing that? It's like, yes, because and that's a good thought, because I remember coming out of college and just always spending too much money, because now you have money.
Which it really wasn't a lot of money. But coming out of college, my first job was salary. I thought that was a lot. But looking back at it, I'm like, they was wrong. You know? They paid me nothing, right?
Yes.
But at that moment, I thought it was a lot. But there's so many things. Also, at that moment, I didn't have many bills. Graduating, I had my student loans, right? Then I, of course, had an apartment because I had to have somewhere to live. I still had my hoopty at that time.
Yeah.
And I guess had I known more then, that was probably a really good time to do a lot of my saving, because I was entering into the world of like finances and stuff like that without the debt besides my student loans that came from being in school. But like, I didn't have credit card debt. I didn't have a car note. I didn't have not any of those things. But I spent that money and had a good time.
Yeah. Just think about it. The goal is to pay yourself first. So set up a savings. Have a direct deposit going into that savings. Out of sight, out of mind. You're paying yourself first. That's a good way to start a savings. Just to remember that, just to pay yourself first.
So consider yourself a bill.
Absolutely. Absolutely.
Because you're working on that mental capacity.
Gotcha.
Absolutely.
That's smart.
I just started paying myself, so
I just started paying myself.
I'm late in the game. I just started, and even I tell people that when you get new jobs, you get more money, right? Then you were living off that salary that you had before. So whatever your increase is, save it, put it somewhere, do something with it, invest it, do something. Don't try to use your new salary. I know you're excited about this new money, but this new money could go to do some more things, because you were living fine before, unless you were living above your means.
Absolutely.
One of the questions I pose a lot of times when I'm out talking to individuals, it boils down to, it's not what you make, it's what you do with what you make. A lot of times we're in group settings or we're amongst friends. Think about the different things we talk about, but finances rarely come up. It's because people think, and I don't want to make a general statement, but I think I'm pretty accurate on it, is how much do you make? That's not the conversation. It's what are you doing with your money? You may share something that you're doing that can help me. You may make $25,000, I may make $24,000. How are you working that process?
Yeah.
It's a big game that you have to know how to play.
Yeah, and it's crazy because what started the conversation for finance for me now is that, I'm sorry, sister, I don't mean to tell your business, but my sister recently, the job she was working, they closed. So they let all of their staff members go, of course. And I remember she was saying, and she was like, okay. And I was like, you ain't got no job? Like, what about your bills? You know, I started freaking out because I was like, if I leave tomorrow, they leave me tomorrow, what am I going to do? And she was like, oh no, I have savings for 6 months. And I was like, so you telling me that you're going to be able to pay all your bills for 6 months without a job? And she was like, yes. And I was like, you're supposed to have like a cushion for yourself. So if things like this happen, you'll be okay. And she was like, and honestly, I'm just going to sit down for like a month and then take my time and find a job that I want. And so like, as we were having that conversation, I thought about how much not just having that savings changed the decision she was able to make outside of just money, but like taking your time to find a job that you want to have rather than a job that's going to pay your bills is more beneficial than someone who job to close down. Now you got to hurry and find something really quick. And so like having that conversation with her started to change my mind about like how I looked at money. Like, you know, I would be in a place of desperation where she's like, no, I'm fine. And I'm going to find the job that I want and not just anything.
Yeah.
Which all it goes back to what?
Mental.
The mental capacity that she had to do that. And guess what? She put herself in a better position.
Absolutely.
She was positioned, although her job may have transitioned or she's in transition, she was positioned in a way that she can do some things.
Yeah.
That's what so when I talk about my 22-year-old, that is the one thing I wanted him to do. Like so he's that student, school wasn't for him, right? He went to the military, and you know, in the military they give you all this money, right? I mean, it's not a lot of money, but to him it's a lot of money. So that's one of the things I've been teaching him is to put money aside. Like, you don't need this amount. So I told him to pay me. I was like, pay me every month. I need you to pay me this amount. And so he's like, okay, I'll pay you that amount. So I've been saving it up for him and putting it in a place. And he knows exactly where it is. And he understands that in essence, he is taking care of himself. So now he's got his own apartment, which I didn't want. You know, his parents are like, no, don't get him. But, you know, he's in a better position. It was just the credit cards and all those things that really, he didn't have any credit. So it wasn't money, but he just didn't have credit. What is a good way that they could start building credit? Good, healthy credit.
Actually, there's two ways. For one is the parent. You can sign them up as an authorized user when they maybe become 16. As long as you use the card well, it's going to benefit them.
So don't get credit cards with your children's name and mess
No,
them up.
Absolutely not.
She said authorized user in your name, and then they own there,
And you just have to,
and you pay it well.
right.
That's right.
Like you said, it goes back to that mental. As long as you're using it well, it's going to benefit your child. Also, there's, a lot of times there may be some financial institutions that will take a chance on them and give them an unsecured credit card. There's also secured credit cards that they could start out with, a small limit. Teach them how to use it well. Their banker should teach them how to use it and discipline them, show them discipline of how to use the credit card. That's going to help them establish credit. But a lot of people, like I said, normally sign their kids up as an authorized user on their cards when they're younger, just to get them started. So when they do turn 18, 19,
They'll be ready.
I have a question. So, like, it's a good question too. So, one thing, the bank has my money, right? That's where my money goes. It's housed there. But, like, you know how you go to the doctor to see the doctor, you go to the dentist, you go to all these people to see them. Is there a way to have a relationship with the bank, like somebody you go see and talk to about your money? I've never talked to anyone about my money besides, can I get that $40? Because cash and then leave. You know what I mean? Like, I'll go withdraw money or I go put money in there, but I've never really had a conversation with anyone about my banking at the bank.
Okay, so I will go ahead and tell you, just in the example you've given where there's doctors that can diagnose you, your banker or wherever you choose to house your money should offer you that same level of service. I've worked in major industries and now I'm working with a credit union. And I will say there's a lot of value that's placed on sitting down, assessing, and having good quality conversations about what you should do in regards to your finances to make sure that you are in the correct bucket that you need to be in. So if you're not getting that, I would strongly urge you to start looking at some available resources that are out there. ASE will take care of you. And really sit down and talk to somebody that's going to help you, because in all honesty, there's a lot of things that people don't know. And unfortunately, the way that you find out is by going through those life experiences. It's easy to accumulate that, but once you get to the point to where you overexhausted yourself and you can't pay it, it's really, really hard to dig yourself out of that hole. So take advantage of all of the resources that are available to you. There are so many YouTube videos that you can go and watch. There are so many books that you can go and read to pull up and get information about, finances. So if you're not getting it from your financial institutions, there's resources that are available to you. You just got to, take that interest and look at it. But now, anytime you need help, you can come on to ASE. I'll help you. No, you.
That's right.
You ask, come.
Should I pull up my bank? I tell people, not only should you have a good doctor, you should have a good lawyer, you should have a good banker. You know your doctor knows you. You know your attorney knows you. Same way in the banking industry. Your banker should know you as well, because you deserve that. And so I'm not telling you to switch, but you should explore opportunities, because again, your banker should know you and they should have your best interests at heart. And I just want to piggyback on resources that she mentioned. One resource that I love is bankrate.com. Bankrate.com.
Rate.
Mm-hmm. It's a very objective site. and you can go on there and find information about anything. It's a one-stop shop. If you want to learn about mortgages, you can get it there. If you want to learn about car loans, if you want to learn about lines of credit, I mean, everything. It can prepare you very, very well.
Okay.
You can put in interest rates, and it'll show you what your payments would be. So just imagine if you go to the car lot and you're going to buy a vehicle that's $30,000. You've already figured out what your payments will be.
Mm-hmm.
You've already done the math, or at least close to doing the math.
Or if you have a great banker, they can do that for you as well.
But
You know.
I'm saying do your homework. That's what I'm saying. Be prepared and do your homework. Yeah, they do a great job.
Absolutely.
But
And I'm trying to help you here, Delbert.
and until 7 o'clock, then we're gonna say it's different. No, it's all love. It's all love.
But no, it's important to find somebody that's really out there that's willing to help you. And those resources are available to you. So again, just like Delbert said, just like I said, if you're not getting that from your banker, you need to take the opportunity to maybe go and talk to somebody else.
Now, is it important really to have your have your money in different banks, or because I've known a lot of people say don't keep your money all in one bank. I mean, I don't have, I have made it to the
I ain't got
point
the money
yet
for multiple banks yet.
where
I'm getting
the
there.
insurance does not take care of my money. I'm getting there. So is that because I know traditionally, if you know the history, that there's some African Americans in the past, we have been taught that they don't trust banks, but for whatever reason, and there are some historical things that happen. If you don't know, the reason why black people don't trust or hand trust banks in the past. Should you really keep your money in different banks, or should you focus in one area?
It's totally up to the individual or the business, and I'll speak from the business perspective because I deal with a lot of customers where you're looking at it's nothing for them to have millions of dollars in the bank. I know what you're talking about is the FDIC protection up to I think it's $250,000. But here's the thing: what you looking at it from a historical perspective, the Fed is not going to allow a bank to fail totally. They may get rid of the loans, but they're not going to do anything with those deposits. So if a bank fails, they're going to look for somebody to take those deposits. So in essence, you're not going to lose your money. And then you look at the strength of your bank. Again, bankrate.com is very objective. You can put in your institution and it'll tell you how you're rated. And so before banks fail, if you're in tune to the industry, you're going to see the trend. You just get your money out of the bank. But at the end of the day, and I'm talking 20 plus years experience, I've seen where banks do fail, but again, the deposits are taken care of. So hope that answers your question.
Oh, it does. So another important thing is understanding your taxes, right? When you get paid, she's out here. When you get paid, a lot of other people get paid, right?
A lot of money.
Yeah. So yeah, they do, and I don't think a lot of young people understand that. So again, I have a 16-year-old, and he is currently working, and he's like, "Mama, who is FICA? Who is FICA?"
FICA is. I may have to Google that one.
Okay.
I mess it up, but it's different categories. But
Right.
Let's go to Bankrate and look it up.
Let's do it. Let's see what Bankrate. But no, I think it's important for them to understand the levels, the taxes that you have to pay,
Yes.
and then all the things that go into your check. Because I was just watching a YouTube video, not a YouTube, but what's the other big thing? TikTok video. And this young guy, this father had his son, and his son had worked hard, and he was like, "This is my first paycheck," and he was so excited. And then he said, "Oh, I'm gonna get paid a lot of money," because he knew how much he was making, he knew how many hours that he was working, and when he opened that check, he was like, "Whoa, wait a minute! Who are all these people?" Including Medicare. You take Medicare comes out on your check, right? I think FICA comes out, and I want to say.
So you have state tax, and the FICA is, and I just looked it up, but then it kind of
Thank you so
made me
much.
remember. It's the federal tax that you pay.
Oh.
So when you look at your taxes between state tax and federal tax, it's a combined rate of about 25%, if
That's
I
a lot.
remember correctly.
Just a lot.
And then you're not even talking about paying your insurance
Mhm.
that you have to pay every month. So all those things are deducted, and it's several things. But from a tax perspective, you could figure about 25%.
Mhm.
That's going to be close to that number. But people fall into different tax brackets.
Right.
So that 25% would be the lower end. When you
I'm-
look at state
yeah.
and federal together.
Okay.
Yeah, 25% of your money will go to taxes and all that stuff.
Yeah.
Woo, that's a lot of money.
That is.
And then if you work in any education, I work in education.
Mhm.
So in addition to all of that, we have to pay for retirement.
Mhm.
Teachers' retirement. Man, the teachers' retirement just went up, and I was like, dang
They
it.
sent me the nice little email.
That yours went up too?
Yeah.
Oh wow. Yeah, so teachers' retirement just went up, which brings us to a place of retirement. When should someone start planning for retirement?
The day you start working.
That's right. And take it seriously.
In case you
Yeah.
missed it, she said the
The
day
day
you start working.
you should start planning for retirement. Again, it's that mindset, it's that discipline. Oftentimes people don't think about starting to save for retirement until you hit your 50s and you hit your 60s, and then at that point, you don't have anything that's going to help you live your life comfortably. I'll share a personal story, and it's one of the biggest financial mistakes I made when I was fresh out of school, got my first real job with that first real salary that I thought was a lot of money.
Yes.
That type job. I thought, obviously, I was making pretty good money, right? So I could forego contributing money to my 401k. So at the time, I worked at a financial institution. I was like, well, hey, I'm only going to be here maybe 2 years tops, right? So, and no need in giving that money. I'm going to keep it and watch it grow on my savings account. Well, what intentionally started off as 2 years later turned into 5 years, later turned into 10 years, and I realized, I ain't going nowhere no time soon. So all of that free money that I could have been getting to stack in my retirement account, I missed it. I missed it. And unfortunately, that's the money I never get back unless I, win the lotto. So if you got some winning lotto numbers, you
Oh,
get to me.
I'm trying, girl. I be asking God to bless me with it.
Absolutely.
But when you say free money, a lot of companies will match what
That's
you put in
right.
retirement.
Absolutely.
And if you don't put that money in, then you just don't get it. That's the benefit that you miss.
So again, out of sight, out of mind. If you never had the money go into your account, you never know what you're missing. So as soon as you start working, you need to start thinking about retirement.
That's a good one. I was actually learned my lesson almost the hard way because I was don't tell about it, but I was looking for another job, and I was talking
This
to
is a long time
this is
ago.
long time ago. And I was talking to one of my colleagues, and we both started in the field around the same time. She has like a year over me, and I was talking to her, and I was talking about how I was, trying to find something out of the state of Alabama. I'm just ready to move around and all that kind of stuff. And she was like, "Oh, you can't leave yet." And I was like, "First of all, you can't tell me I can't leave. I'm ready to go." And she was like, "No, you have 2 more years before you're vested." And I was like, "What does that mean?" Like I had no idea about what that meant. And she was like, "If you leave now, you'll be walking away from all of your retirement. You won't be vested. So all of that money that they're matching for you right now, you're literally just gonna walk away from it." And so I went home and I started doing some research, and then I see how much money it was that I would be walking away from. And I was like, had I not just been having this casual conversation with this girl, my colleague, I literally would have walked away from almost 10 years of money that I had been working really hard for just because I was ready to get out of Alabama. So I definitely think that's a really, really important one because I literally almost left money. A lot of money. I did. When I seen how much it was, I was like, and I wouldn't have been able to get that back.
And it was simply because you had a conversation.
It was simply because I had a conversation.
That's exactly it. And a lot of employers, you will see, they will match, like she said, anywhere from 4 to 6%. So you don't want to leave that money on the table. That's free money for you. But if you're tight and you're living paycheck to paycheck, you're not thinking about putting money away into that 401k. You're not doing that. So again, learning it earlier and conditioning your mind. I don't care if you save $1 every paycheck. Just save something.
Yeah, and don't move it back.
That's where it would help to have it go somewhere else. And that's something else that helps with savings, because again, it is a discipline. So another great tip that I always share with people: if you are not disciplined in the sense where you move it over, it stays there, you need to have you another account that's set somewhere where you don't have any type of access to it at all. Then that way, that helps to break that. Let me transfer this money back over because I can pull it up on my phone and see that it's there. Yeah, so definitely that's something that a lot of people will do.
I need to,
Or,
because I be moving it
Like
back.
she said in the beginning, she just likes to see it there. She don't mess with it anymore. So as it accumulates.
Yes, I
like to
do.
see that balance.
Oh, I love to see me a good balance. And my husband's like, well, how do you get all this money? Oh, I know how to get all this. I be putting it in. Yes, I like to keep it. Like, keep it. If
I don't.
No,
You
I
know, like-
can't. I'm with you. I
I'm
need
like
to
you.
send it off.
Yeah.
I can't. I don't want to touch it.
I'm like
Oh, I like to. I mean, it just looks good.
I need
It still looks good on the other side.
which it
though.
does. I need to be able to see it, but I just don't need to be able to have it easily accessible.
That's right.
Because if I'm out shopping and I see that cute little purse and I say, oh, I just can transfer it on over,
yeah.
then if I'm not disciplined,
You
I
know,
might transfer
which
it on
I
over.
think COVID messed a lot of us up because I don't think I've ever shopped this much ever. Like since COVID, I've been shopping up a storm. I'm not going to share where I was shopping, but you know where I was shopping. It's an easy place where you click, and it arrives at your door, right?
The next day.
Yes,
or so.
yes, and I really had to change my habits. I had to start thinking to myself. Let me tell you another way that you should save. Stop eating out.
Yes.
So like I say, I do it all the time. I eat out all the time, so I know it's bad for you, but stop eating out.
I don't like that one.
You don't? Okay.
I'm just playing, I'm just
We
playing.
know
I'm just
where your
playing.
money is going.
Well,
I'm just playing.
I think that brings up a good topic around a need versus a want, right?
Yes.
Because we need food to sustain our bodies. But does that mean that every time we get hungry, we have to go and swipe that debit card? No. We can buy groceries and cook at home, wink, wink, and that can save us money. But again, it's about that mindset. It's about that discipline.
Yeah, so
That's true.
and if you can't cook, if you're like me and you can't cook, I promise you, there's a lot of Michelin meals, some little meals that you can cook, and some of them you got healthy choices. It's out there in the grocery store, and it's less expensive than if you go to the restaurant. And not only does it help you with your financial health, it'll help you with your physical health too, because you're gonna be eating all that high calorie food and gain weight and having high blood pressure. And No. I'm with you. I think one of the most valuable things you can learn with money is understanding what you need and what you want, and not being so strict that you can't give yourself some wants, but being strict enough where you understand your needs. It's a really hard line to draw. Because we live in a society where we see everything is so visual and you can see things and you're always grabbing and you want this house and you want this and you want that. But then you have to remember, is this really a need, or am I good with where I am? You know, even your cars, like you don't have to get the biggest, shiniest car. Just get something that go back and forth. You know, you don't have to, because, and then let me tell you something, for all the young people out there, when you get these new, big, expensive cars, sometimes you have to pay for the new, big gas. And that gas fluctuates. That's something we don't control. That's something, because a lot of time financial decisions are not in our control. We don't control interest rates. We don't control whether the gas goes up and down. But if you get a car that requires 93 gas, some places you're going to be paying $4 a gas, $4 a gallon. Where if you get a car that just use regular simple gas, you paying $2 something versus $4 something, which is automatic saving for you. So think about your vehicles in a way that are they beneficial for us, and your insurance, like, because the more luxurious your car is, the higher your insurance. Just FYI.
Yes.
Which is true. And then I think also it's important to note that as soon as you drive that vehicle off the lot,
Yep.
it automatically depreciates in value. So just by driving it, you've already lost a big chunk of money that you
Less
put
than a
into.
mile.
And know
Less
what
than a
you
mile.
want before you go up there, because they got me. I bought a car with heated seats and a heated windshield in Alabama
Heated windshield.
because it had all these humidity. And it was so nice and shiny. And I was like, oh yeah, I like that. And then I got a car and drove home, and I was like, why do you need a windshield that automatically defrosts itself at a certain temperature that's never going to reach in Alabama?
I know, because you were thinking from your.
I was thinking that I got this new job with the increase in the salary, and there's a pretty car, and I wanted it. That wasn't a smart decision. I knew I wanted to go buy a car, right? And I mean, I got a great interest rate on it and all that good stuff, but I didn't need all the tricks because the tricks added to the bill of the car. Those little, tricks weren't free. You pay for the heated windshield. You pay for those heated seats,
Right.
the heated steering wheel, the backup cam. You pay for all of that. That's all in that price. But I don't think we realize that like everything you get in that car also is money too. So thinking about knowing what you want before you go up there, so that the salesman's gonna do his job. His job is to upsell you and get you to buy something really expensive. Just know what you want and stick to that. Because I knew what I wanted, but then he started showing me all the pretty stuff, and I walked away with a car with way more than what. And then he showed my interest rate, and I was like, oh, I could do that, and I bought it, but I didn't need the heated windshield.
Or the heated steering wheel.
Or the heated seats.
But in the wintertime, I bet you love it.
Not really.
You just have to remember it's a big game. And
Mhm.
like you said, you go into the car dealership, they're trying to sell you, so it's a matter of who's going to win.
Right.
Are you going to win or are they going to win? So you really want to know what you want when you go to the car dealership. It's just like that impulse buying when you go to the store. You see all that candy around the cash register and those different items. It's there for a reason.
Yeah.
Mm-hmm.
That
So
makes
again,
sense.
it's a big game. You just have to, once you realize that and you start putting it in that perspective or that light, I guarantee you'll see things a little
That
bit
experience taught me. Like after that experience, I was like, I'm never going to give God again. And so that's why I'm really big on trying to figure out finances and all that kind of stuff, because I feel like before I was educated on it, I got played a lot in the beginning, not because they were intentionally trying to hurt me, but they were doing their job. They were trying to get the, sell me the most in that car, or, get me to get those nice things. Those people were simply just doing their job. But I was the one who was in there uneducated and didn't know what I was doing. And so it allowed an opportunity that wasn't best for me. And so ever since then, I have always been big on, I need to ask a million questions and I need to understand what's going on, because I don't ever want to get God again. And just because I can afford it doesn't mean I needed that.
That's right.
Yeah.
Eyes.
And I love my car, I ain't give no problems, but I'm just saying.
Yes.
I could save some money.
So with what you just said, that's the whole thing. We have to be able to share our experiences with the younger generation that's coming up. So we have to have these conversations with them because it's real. You don't want them falling into those same traps, if you will. So the more you can talk about it, the better off we can help them.
Yeah,
grow.
for sure.
So what's another good tip that young people should know as they're entering into the job force, or they've been working for a couple of years and they just feel like they're in a stale place? What's another great tip that you would like to share with them today? They're like, I don't know.
I would go back to what I said earlier. Is you have to educate yourself. It's an ongoing process. You're not going to learn it all in one day, 6 months. It's an ongoing process. And so I would go back to the resources piece again, because you will never know everything. It's just, I think it's really impossible to know everything. That's why we use investment guys or investment people. I shouldn't say guys, but investment people, because they know that area or that arena well. So when you talk about your 401k, hey, that's what you do well. We're relying on you to help us with that. So to answer your question, I would just continue to build on those resources and educate yourself.
And to piggyback off what Chastity said earlier, you got to teach your kids when they're younger. Sometimes we can be a product of our environment. So teaching them young, don't keep them in the dark about things. Show them how to balance a checkbook. Show them what money is, the value of money. It goes back to teaching them young. That way they can have those habits and build those habits and go on and use those habits in their adult life.
Yeah, one of the things that I know for young people, and I've had a couple people to lose things for the lack of insurance. So one of the things that I want us to talk about is just the value of insurance, whether it's renter's insurance, that means covering your apartments, whatever you're renting. Car insurance is extremely important. It's extremely high. And health insurance, because we have a lot of bills. I mean, health, if you're not careful, medical bills can be really, really expensive. I always advise people to get the higher medical insurance. Like if you have a low version and high version, get the most that you can get because you never know what's going to happen. Like health insurance has been a really big deal when it comes to affecting your credit in the long run.
Can you get those type of insurances through a bank? Is there any type of insurance you can get through a bank?
I know credit unions, we offer gap insurance, which is an additional insurance. For instance, it's going to pay for whatever your regular car insurance doesn't pay in the event that your car is totaled. So you're not stuck with an auto loan.
That's a good one.
Yeah, I didn't know about that.
That's a very good one. And can you talk about that a little bit more? Because a lot of people don't know about that, and I didn't really know. She taught me.
Yeah, your gap insurance it's kind of like a secondary insurance. So if your car is totaled or something, your insurance is only going to pay what the value of your vehicle is at the time of the accident. So if there's a large balance left, that's where your gap insurance will kick in to wipe out that balance, so you're not stuck with the auto loan.
So you're not
that's
stuck
there.
paying for a loan on a car you can't even drive.
Absolutely.
That's a good one.
And we saw a real situation with that with a close friend who passed away this last year, and the family was not burdened with paying that debt because of the insurance.
Gap insurance.
That's a good one.
I know it's really good. And speaking of that, life insurance. Let's talk about it. How important is it for young people?
All people.
I
It
think
is.
life insurance is very important. I think you should, as soon as you have a child, you should establish a life insurance policy because your rates are going to be cheaper. And actually, life insurance is an investment. So if you talk about generational wealth, those type things, one thing we know is we're going to leave here. And a lot of times we don't like to talk about that, but if we can change that mindset, start those policies early, because the older you get, the more it's going to cost you to have a policy. So that's my take on it, but I don't want to dominate.
I agree with you 100%, with that, specifically around, the life insurance. Just as you said, at some point we all have to leave here, and we should prepare for it. Life insurance oftentimes is not looked as a means of being able to have that generational wealth that we speak and that we see a lot of other people have.
Yeah.
It's one of those things that's really taken for granted. And also, to Dilbert's point, get into it very early. I have a sister that's very young, and I have her in a policy. That may not be something, again, that people are thinking of, but it's inevitable, and we need to start preparing for it. Go setting up a GoFundMe account. Have folks talk about you.
Yeah.
That's not what's happening.
And you're not establishing wealth. Go ahead.
Well, and then I was going to say, there are a variety of insurance policies out there that you can establish. And I mean, you can put yourself in a position where if you started on one with your child as soon as they're born, by the time they go to college, it will build up a cash value, and they can use some of that money for college.
Yeah.
So it's the strategy too. It's a strategy behind it as well. But yeah,
it's so many group life and term life. It's so many different versions of insurance. One thing a college professor shared with me a long time ago, which I'm trying to do, but good Lord, insurance can be so high when you want to just keep the money. Mind you, listen, I'm preface all my conversations. I love to see my money, so everything is high to me. But he talked about when you finish college, right? You get your insurance, then you should get enough insurance that if you were not to pay your student, let's just say you put your student loans in forbearance, right? And for the rest of your life until you can't anymore. You should get a life insurance specifically to take care of your student loan debt so it would not impact your family. That's what he said. Then he said you should have your children to do the same. So, for example, if I have $100,000 in student loan debt, I should have a life insurance for $100,000. Then I should get each of my children to do the same insurance, get at least the same amount of insurance that I have. So at least they'll have $100,000, and if they ever get student loans, it will pay their student loans back. Now, other thing he talked about was doubling, every generation double. So so if my mom leaves me $300,000, then I should at least get $600,000 to be able to leave to the next generation. And then that generation should double it, get 1.2 million. That is how you build wealth, because we know, like you said, death is inevitable. Ecclesiastes tell us it's a time for everything. We're going to live, we're going to die. So you have to prepare, and you have to change the narrative of your family. So if you only get $50,000 in insurance, yes, it will take care of your final arrangements, but will it leave enough wealth where you're changing the environment for your children and your children's children? Because y'all know the Bible, it says a good man will leave wealth to his that scripture. Y'all know the scripture.
I'll take that.
Leave wealth for his children's children. That's how you know you're a blessed man, because you're not just thinking about your children, but you're thinking about your grandchildren and your great grandchildren. You're building wealth for that. And even he talked about doing lifetime policies. I didn't even know you could do this. Like, you could pay a lump sum and have a lifetime policy. And if you require them to pay that from the insurance that you leave, so if I leave $600,000 and I say, look, you can get this money, but you have to buy upfront lifetime insurance with this. So 1.2 million lifetime insurance you pay from this money. So the next generation will automatically have 1.2 million regardless of what other insurance that you have. So that's I'm trying to live that life. I'm trying really hard. But it's teaching me to think differently about how I'm leaving my kids.
Right.
Like, I want them to have a better life than what I have, and I want them to have a better settlement. Because I think for young African Americans, sometimes they have to. She made a very good comment earlier. Sometimes we leave college and we have to get the first job. It's not about the job that we want or we like or we're passionate about or we really went to school for, but it's okay, this job is paying me money, because we have all these bills or these things that we have to take care of. But sometimes you have to let people land, because there's a lot of entrepreneurs out there. It's a lot of things that God give us. And if you go straight into positions, sometimes you'll lose whatever it is, or it'll take you forever to get there. So I'm a firm believer in trying to leave that type of availability for my kids. If they need a year to travel the world, I know that's weird, but I want them to be able to travel and see things differently. So just think about that. Always doubling up. Whatever your parents gave you, at least double for your next generation. And talk to your kids about whatever you're leaving them, that they double. And so you think about that. I have 4 children. So if I have 4 children, that's doubling up, and I at least leave them $600,000. We're changing the trajectory of our family and the generational wealth that we're leaving. So just a thought about insurance. It can be, if you're like me, I don't like all the different things when it comes to insurance, but it's really, even for entrepreneurs. So if you're a cosmetology and you use your arms, you can insure your arms, you can insure your legs to make sure that if you were to get sick or get hurt, that you're covered in those seasons. So all of that comes to protecting your financial wealth and your financial health. Can you believe it? We're almost done. We've made it to the end. So in these last 2 minutes, I just want each of you to just share one last thing to the audience that you want them to know, whatever it is about finance or about life, and just share some good wisdom. We'll start with you, Mr. Deverett. Sister Mike is focus your way.
I hang my hat on this chart that I showed you. So I don't vary from that or move away from that too much. So those 3 categories, just put yourself in a position where you can live below your money or below your means. That's the intended goal.
All right.
And all I have to say is discipline. You've got to practice that discipline. It starts with that mental state.
Yes, it means pay your bills on time.
Exactly. And I'll say start early. Start early. The earlier that you can start getting yourselves disciplined and in that mindset, the better off you'll be.
Yes. Well, thank you three so much for coming and sharing
You're
tonight. I
welcome.
truly enjoyed you. You've dropped some great wisdom and knowledge. I've learned a lot myself. Marnika,
I learned a ton.
you learned a ton.
So
So
my advice is listen.
listen to the things that's been said. Right? Check. Well, I think we've accomplished our goal. Marnika said she needs to learn a few things, and she said she's learned a lot. So, check, objective made. Thank you so much for staying tuned and listening to Hearts and Hills. Next week we'll be back here, same time, definitely not the same way. We have a special guest coming in the studio that's going to share with us, so make sure you tune in. Listen. Whatever you do, make sure you do it with all your heart. And if you can't put your heart in it, put your heels on it and walk away. We love you, and we'll see you next week. Good night, guys.
Good night.
Good night.
Nice.